Greetings, everybody. This is Jeff Scott. Welcome to this week's review. I titled today, What Happens When Markets and Economy Diverge? Before I get started, just a quick housekeeping note. In YouTube, I need you to do me a couple of favors. If you're watching this on YouTube, the first thing I'd like you to do is hit the subscribe button. Now, the subscribe button, hold on a second, I'll find it for you. Well, maybe it's because I'm already it's my own channel. So the subscribe button would be, I look at somebody else's video perhaps. Here's Sager's great videos, and I'm already subscribed, but hit the subscribe button. If you like what I do, hit the like button. The reason why you hit the subscribe button is simple. That way you'll get notifications when I post things. You also notice that here there's a gear, all right? If you left click on that gear, you open up, it says quality. It's defaulting to lower than top quality. I do mine in 4K. You want to change that gear to 4K if you're watching it on YouTube. All right, now let's move forward. Oh, by the way, I highly recommend Sagar's videos. He has a different approach to the market, and I've actually adopted much of what he does in my day-to-day trading. So let's go to slideshow, and we're going to do this as, oh, it's going to mess me up, right? Okay, primary, let's see if that works. Hey, it worked. I titled today, What Happens When Markets and Economy Diverge. It's the 19th of April, 2020. As always, it's for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. You will notice over the last couple of weeks, I have brought a couple of other educators with their tools on. I do it because I use their tools and I learn every time I listen to them. In many cases, when somebody brings a third party on, it's in exchange of money. Every time you buy something from the third party, there's an affiliate fee paid to the person that introduced. I have asked each of these folks to take whatever they would give me and give a deeper discount. I take no money, and I've paid for the tools that I have demonstrated and, frankly, are demonstrated to you. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I always like to call out my where I learned from. I started with CanSlim, improved by Ian Woodward, George Lee, a great trading friend who recently passed away. Gil Morales took CanSlim to a next level, him and Chris Catcher. Van Tharp, position size money management. Here's Cigar with superior profit. And then my buddy John Person, who's an educator, mentor, friend, great indicators, who really taught me how to go from a list of stocks to how to make trades. For those that don't have HGSI, this is the website, and key things there is a free 30-day trial, and under investing strategies are a large number of free videos. Down here is a link if you're interested in the John Person add-on package, and I'll post or I will send the link to the HGSI board, but there's going to be a John Person and myself will do a webinar, I think on Thursday, about how he uses the indicators at HGSI. About 10 days ago, Dr. K, Keith Wade, did a presentation on some of the tools I use, and he gave a number of deals to HGSI members. They're still active. If you don't have a chance to write these down and you have questions, you can email me. These are tools that I use. Now, he just launched separately a tool for futures and Forex. Stock patterns are cyclical. On late February and much of March, we clearly were in stage 4. We've been in stage 2 since we bottomed on the 23rd of March. The question is this a bear market rally or have we started a new bull run? I can make arguments both ways. You play the market that you see, not the market you think you should see. And right now I'm tilted to the long, although we've had a big run up and a pause to refresh would not be a bad thing. Therefore, as we move from stage 4 to stage 2, I got more aggressive, although I still have a fairly significant cash position. On Friday, you can see a sea of green as the market was very strong, driven by perhaps cynically some unrealistic exuberance after Feuerstein Stat News report about some activity in Gilead's drug for COVID. As a physician, I learned not to get excited by anecdotal evidence. That was not the results of a trial. It was anecdotal. But at the same time, you keep hearing more rhetoric about the economy opening, and you hear about lower deaths and hospitalizations in New York City from Cuomo, and Boeing actually opening up a plant. So perhaps a lot of cautious optimism. If we take a look at the major markets today, let's open up Thinkorswim. And this should be my daily charts. It is. I've learned to check that because a couple of times I've gone through and said, oops. The highlights here, we hit the highs in late February. We hit the lows on March 23rd. We've had a big run up. We'll look at where we are in a few minutes from a Fibonacci perspective. You start to look at the E-minis. They've now run into the 50-day moving average. The 200 is right above. You would certainly have expected some resistance here. You did get a doji right about the 50-day moving average, a decision point. A pause, a pullback perhaps to the 17, and then another move up would not be bad. But is this more bullish appearing than bearish? I'd say it's more bullish. That's the E-minis. I look at the NASDAQ futures. These puppies here, here's the beginning of the year, have blown beyond. Let me get to the right one. Hold on a second. This is the beginning. Have basically gotten right up to where we started the year, closed right above it. So have now taken out the beginning of the year highs, and the NASDAQ futures are now up on the year. The NASDAQ is still a few points below in the cash markets. More bullish than bearish. I'd have to say it's more bullish. If I look at the Dow futures, let me make them look the same. Weaker than the others, perhaps a little bit below the 50, also a doji, but again, in a buy signal, more bullish appearing than bearish. If I look at the Russell, you see something that looks different. We are much further down in the pattern, although we did get a new person buy signal. The high was also at the end of February, but interestingly, the all-time high on the Russell 2000 is further to the left. This was not the all-time high. Well, the others all had their all-time high right before the market fell over. I'm less bullish looking at the Russell, so that might be a negative. The VIX, boy, it's still elevated. It closed at, get my glasses on. Yeah, I know, hard to see with the 4K. It closed at 34.8. The good news is it's come down quite a bit. It's broken down below its 50. The bad news is it's still very elevated, and that has got to be of some concern. We'll continue to hope to see a fall. My friend George Lee used to say when the VIX is low, look out below. When the VIX is high, it's time to buy. Why? Because typically the VIX comes down. I will tell you 2008-9, there was a double top, and in this level, the VIX started going up. So I'm still a little caution on the VIX. And then one looks at the dollar. I've called this consolidation for some time with this little move here with the craziness of the sell-off, and it's still in the same consolidation range. So if I had to be more bullish or bearish, I would say I am more bullish here. Back to the show. All right, easy to catch up. On the weekly charts, you can see the E-minis has taken over the NASDAQ 200 weekly with a buy signal. The NASDAQ has taken over the weekly 17 in a buy signal weekly. The Dow has taken the weekly 200 in a buy sell. And the Russell is languishing quite a bit below, and it looks like I don't see a buy signal there. The VIX still elevated compared to where it likes to rest. And then you have the dollar here higher than it's been of late, still in a consolidation here. And you can see it's well off its lows of a year or two back. Now, the question, I'm going to bring over the real chart. It might be easier to see. Are we in a dead cat bounce, or is this a V-shaped rally? Well, I have sitting on my desk during the day this chart all the time, and I'm just going to point out a couple of things. The first thing that really has impressed me, and frankly, as I told the proprietor, save my bacon, is you'll see this here is a Roy Kelly cycle indicator, not available for HGSI. Independent of me, I bought it. In fact, I just bought it for eSignal over the weekend. When I see this red line, that is a major cycle. If the triangle is up top, major cycle bottom. We had a major cycle top that occurred before the market rolled over. When you see these pluses here, these red dots, these are some Q signals from Cigar showing market weakness. Notice that the bongo quickly turned red on the daily, took a while to catch up on the weekly. We sold off hard, and now we've retraced. We're almost up to 61% retracement on the E-minis. We have blown through the 61.8% Fibonacci retracement on the NASDAQ, and we're up to and failed at the 76%. These failed for one day. We're at the 50% on the Dow, and we're barely at the 38% on the Russell. These are all areas that you might expect the market to stumble at. So far, the NASDAQ has blown through every one of them. Notice we hit major cycle lows on each of them. That's very optimistic. And although the cycle finder calls all these major and minor cycle moves, there's not been another major cycle pull. So if you want to be optimistic that this is a V-shaped rally, and right now that's how we have to treat it, although I am cautious and looking for a pullback and how I manage my portfolio, until I see a cycle top with a red line, I have to still treat this as a V-shaped rally. Although, as I've made the case over the last number of weeks, it certainly would not surprise me for this to turn out to be a dead cat bounce. Now, there was a significant improvement in leadership. Those that watched my video last week would have seen the chart on the right ending on 4/9/2020. And what I showed you was that the performance 2 weeks ago, or starting 2 weeks ago, was greater in the garbage stocks. The lower the ERG, the better the return. And you could see here relative strength rank. Here's the high relative strength on the right, the high group rank, the high earnings rank on the right, A, D, C, and D. All the junk outperformed. So the cruise ships, the airlines, the hotels, other leisure industries have been shut down, outperformed, and energy off the bottom. This week, on the left, made me feel much better. Why? Because I'm a high ERG kind of guy. I'm a growth guy, and I want to see the curve sloping like this, which shows that high ERG stocks had a outperformance over low ERG, and you could see EPS rank, relative strength rank, group rank, and A and B accumulation distribution had some of the highest returns. Also, if you look at my boxes 1 and 2, outperformed. Again, the things that you would expect in a bullish market instead of a junk off the bottom that we saw a week ago. This was a crazy strong week. As you'll see, I wrote some of the NASDAQ 100 leaders for the week. I was up 9.63%. This has got my performance back. I'm shitty and bears. I have to admit it. I get out way too late. Then I have FOMO and I screw up and I eat up a lot of my profits. I'm profitable. I'm over 20% up on the year, and I'm happy. I want to grow that. I'm not happy with 20%, but I'm happier to be up 20% plus than down. Last week helped. As you can see, I was up 9.63%. I'm using the group performance tool in HGSI. It does not give you the exact performance. It doesn't take into account size of positions. It says if I took every stock in a portfolio and I bought $1,000 worth, what would the performance have been? It's directional. You can see that the S&P 500 was up 4% on the week. That is a very, very strong week. Last week, all the bad stocks were on top. The neat thing was my OmniTrader buys my stocks, lower left, upper right, leaders in raw relative strength, group strength, Stocks under demand were the leaders. The Market Smith 200 was up 6.259.7. There's not 250 stocks in it right now, but the your weekend review in IBD was up almost 7%. The IBD 50 was up 5.83. Only one thing you can say is what a strong week for growth. What about performance from the bottom? Well, the first thing is I ran the boxes as if I bought each stock in each box, and you'll have to go back a few weeks to see the boxes, how I make them. But if I limit it to ERG 240, you'll see the stocks without a box were up 30%, and the stocks with boxes ranged above and below that. Certainly no pattern, except, my goodness, look at your percent gainers. I think you'd be happy with any of those percent gainers. If I look at the performance again, there is no relationship, and you can see a flat line across the various ERG as we've had both junk off the bottom and of late growth working. Rates actually fell back as recession and recession fears, depression fears deepened. We'll talk about the employment and the markets. The AD lines, on the large stocks, it's heading up. On the small stocks, it actually took a tick down. And if you look at the NYSE, you can see it better, where on this weekly chart, the last week actually was weaker. And interestingly, in orange, you can see it's all on the Russell. The others are all heading up. Breadth did improve overall. Stocks above the 200, stocks above the 40, both improved. One thing that's bullish, if you take a look at the stocks above 200, when we got above this level in 2009, you could see the market really didn't look back. So that's a bullish sign. 3-month new high, new low is right in the middle, so there's no signal there. The daily McClellan, what do I look for on the McClellan? I look for overbought, oversold. So I look for extremes on oscillators and summation index. They've both come back together. I look for zero line rejects. Don't see one of those. The third thing I look for are divergences. Don't really see one of those here. We did see it up here on this rise, and I've left these in here to remind me that when you see these divergences, it's a bearish sign. Again, do I see extremes? Do I see zero line rejects? And do I see divergences? I mean, do you want to say you got a positive divergence with higher highs on the oscillator, but not yet on the price? I'm not sure I'm willing to make that call yet. Current buckets, take all the stocks in the S&P 1500s, put them in their Bollinger Bands. On the right, what percentage of the stocks are above the midline of their Bollinger Bands and considered bullish? 91%. That's very bullish. Although we have very few stocks above their Bollinger Bands, most of the stocks are between the 50th percentile and the 80th. We would not expect to see a HINDY occur as we're nowhere near a top. I guess what's concerning is we're starting to see new lows pile up again on the NYSE, something to watch. The market tone, we look at the Woody indicator, which is in the middle, is all green, which is very bullish. Certainly has felt that way the last several weeks. This is almost unprecedented on the right. And I think it's calling out the extreme volatility in the VIX, which is still elevated. Interestingly, even with some of the weakness in energy, sectors remain strong. If I look at QEdge, I love this tool from both sector performance and my intraday drilling down. I'll probably show you a little bit of what I do. About a year ago, Sagar shocked me, and he offered all of his tools for a year for free to my users. I hope many of you took it up. I know one of you just bought Metastock this week because the guy I buy my stuff from Metastock called me up and said, thank you. Somebody who watched your video just bought it. I said, that's great. I mean, I appreciate you dropping my name. Not that I get any discounts, but doesn't hurt because some days I ask them to put indicators in. But on the top, if you look at 1 week performance, in magenta you have 1, in purple you have 2-day performance, and in the more maroon you have 5-day performance. You could see Thursday was a weekday, and a lot of things were negative on Thursday, although communications and healthcare and IT and real estate were, communications and healthcare and staples were up. I'd rather look at the 5-day performance, which is the, I just messed that up. 2 days, which is purple, was up 11-0, but over 5 days, we were 4-7, which means over 5 days, 7 of the days in brown. So the brown ones were down on the week. The magenta and the blue ones were, again, apologize for my mistake, 1 day ago, 2 days ago, and then 5-day performance. So even though it was a positive week, unlike last week, not all sectors performed the same. So the winners on the week were communication, staples, healthcare, technology. If you look on the bottom, you could see 1 month performance, and you could see on the green bars, you could see the last 2-week performance, and you could see over 10 days strength. Over a month, it's up 20%, for example, on discretionary, a very strong month. Over the last month, everything is blue. Canaries in the coal mine. We put this together years ago. Ian put it together to give a signal as to what the leadership in the market was doing at that time. You could argue that these are no longer the leaders, but maybe they are. Obviously, Priceline's bookings, that's reflected here. I just didn't change the table. Notice what happened last week. We broke out strong. They led the markets higher. We took out our 2019 close and highs, and those are very bullish appearing, perhaps another bull sign for this market. Know your news and earnings. We're going to get another humdinger, I'm afraid, on Thursday on jobless claims. And I always wonder what that's going to do to the market sentiment. And that day, so far, bad days in the employment have been okay in the market. The big thing, and read the lower right-hand corner. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. There are a lot of big boys there. Perhaps the most important to me, although I did take profits, I'll probably put on a position on Tuesday, was Netflix. But as you look across, this is another very big week of earnings. In this market, I decided to get smaller before earnings, not get bigger. This isn't the first quarter where Netflix way outperforms, but it's still a positive quarter. I'm very curious to hear what Delta's going to say, how much they lost with the traffic down, and what they think is going to happen. Saw this tweet this week from Thomas Lee, and what it says is that the stocks bottomed, meaning they started going up before the jobless claims peak. So we don't have to see a peak in jobless claims. We probably need to see a peak in people going back to work or the economy opening before the market sustains a rally. We don't have to see unemployment go away. So my thoughts. Markets digest COVID-related news as the Gilead drug appeared to offer some hope, while the Boeing announced production returns and a Stanford study suggested that up to 85% more people than expected have been infected by COVID-19. Let's think about that. Mortality is the number that died over the number that has the disease. If we are underestimating the denominator, the number that has the disease, the mortality rate may be much, much lower. You know, it is possible when this is all done that it may be the same mortality rate as the flu. The difference is everybody gets infected, where in the flu it's a much lower rate. But we'll see. Markets moved higher on the week, led by the NASDAQ, trailed by the Russell. Although the Russell led on Friday, you can see year-to-date performance where the NASDAQ is trying to get back to positive. News, once again, will likely dominate as employment figures will be watched, and Congress will hopefully try and pass additional stimulus. They need to refund the small business bridge loans. Eyes again will be on New York City and other hotspots to look for signs of easing of new cases and deaths required to open the economy. Last week, I played it smart. I rode the momentum of Shopify, Netflix, Amazon, Microsoft, and Apple higher. I took profits on Friday. I looked at Shopify and said, boy, this is where it reversed before. It doesn't make any sense. It makes no money. It approached $600. I took my profits and I was happy. Netflix, I had a call position, which I closed. Amazon, I rolled my puts up to 2,400. I'm still nervous about Amazon. They were unable to get the appeals court to open up the courts to open up the JEDI contract for the government DoD cloud. We know Amazon shipping a lot of groceries, but how does that compare? I don't know. And Amazon has been a leader up to now, sold off a little bit on Friday. Microsoft, I still have a position, and Apple, I protected my position. I'm still expecting a pullback, but now as much not as we've had a big run, we need a pause to refresh. Still think we could have a V bottom, although it doesn't look that way, does it? So I'm tilted long, have a large amount of cash to enter on a pullback. As I said, I'm over 20% above the beginning of the year and do not want to give it back, so became a little bit more defensive until we get all clear. All right, let's take a look at the markets. I appreciate the comments that I get. My son always gives me bad comments like this takes too long and I should skip the beginning. And I know I've gone 26 minutes, but to me what matters the most is the market. And although it is it's a lot of slides, those are all just snapshots of the current market. It's none of that is selling you any educational material, for example. If I go into market analysis user groups, I hit the warehouse, it'll open up on the right. I want it to be a top-down view. And let's just look at performance of the major markets going back it's going back 3 weeks in this T1 view. One day has got the highest benefit, a week is second highest, and the third input is looking at 3 weeks, which is just a teeny bit. First thing is last week, all the indexes were green and very big numbers. It was a much more muted week. Biotech led. I think the Gilead on Friday didn't hurt. Small caps, S&P was in the middle. When volatility, commodities, gold are on the bottom, dollars on the bottom, it's usually been a good week for stocks. Let's take a look at what we have here, and then we'll move on. Now, I know you're probably thinking, boy, he repeats the same thing every week. I disagree. I repeat the same thing every day. I do the exact same analysis as I showed you on the slides. So I have a good feeling about the market. So here's the S&P cash market. A couple things to point out. Here's our retracement. Here's 61.8. Here's 50%. Boy, if you wanted to pick a place to reverse, a failure at the 50-day moving average would be perfect. The way the market's going, I expect it to blow right through, but I have to be aware. I mean, there's a couple of scenarios that we can get here. Do we just continue this V-shaped recovery? Certainly looks like that's what the market wants to do. Do we fail at the 50 and come back down and retest the low? I think that's becoming less and less of an option. Frankly, I keep expecting us to do some type of backing and filling here, but we've blown through that. So you got to have three-road scenario. That's the three roads I have. The one that I have to be concerned about clearly is the do we drop down? And I think that's my least likely, but it wouldn't surprise me to see a little bit of a pause here to refresh. Let me clear off some of those. All right. If I look at the Dow, it should look almost exactly the same. It does, a little bit below the 50. The NASDAQ looks stronger on the futures and also looks stronger here. Again, it's taken out, it's 50, it's 200, it's just below its January 1st value. So strength here has clearly been in the NASDAQ. And frankly, it's not just been the NASDAQ, it's been the big boys of the NASDAQ, which is even greater up the NASDAQ 100. Just saw a little news note that they're close on the second round of small business loans, which would be great and cause the market probably to pop on Monday. The Russell 2000 has been the laggard, and you could see it looks totally different down here, doesn't it? If I look at the dollar, and I like to do this in each of the platforms on this call because people have different platforms. Clearly the dollar is sideways on the daily for quite some time. It did have some extremes with the craziness of the market we had on the major sell-off. If I look at the VIX, we know the VIX is going to show it's come down, but it hasn't come down all the way. That's bothersome. This is where it was on the weekly and on the daily when it was quiet. On the gold eased a little bit on Friday, and that pulled down miners a tad, although the one miner I had did okay. Miners are consolidating here. Perhaps they're flagging. I think gold will go higher when the Fed is giving all this money away usually, and the rates are so low, it'll ultimately create some inflation. And silver, probably reflecting its industrial use, is lagging. Now, if growth is really better than the IBD Innovator Fund probably picked up this week, and you could see it hasn't gotten above the 200, but it's been an uptrend off the bottom. So that's good if you're a growth stock investor. Maybe I'm disappointed that it's lagging a little bit. If I go and I look at the industry groups, you can see I have 175. Now you want to see what a bullish week looks like? 2-day up, 107. The only down stock group was precious metals because, as you saw, gold gave and silver is weak. If I want to look at a longer profile, 5-day up, I got 108. 5-day down, I've got 0. When I ran my OmniTrader scans, it was probably 20-1 bulls to bears. And when I start to see that, usually it means the market's getting extended in exuberance, not it's the greatest market forever to be bullish. So that might be a little bothersome. As you know, I like to go through the top couple of groups. Let's look at biotech. I mentioned Gilead had some good news on Friday or Thursday after the close. Look, I'm a doctor. I own Gilead. I was thrilled. What is the first thing I did on Friday morning? I rolled my calls up and took profits. Why? Because it was anecdotal. Remdesivir or whatever it's called, remdesivir, if the thing works, that's awesome. But all they said was these sick patients in Chicago got better. Now the study data should be out sometime in April. If it's positive, it'll go higher. And that's why I rolled them up and I didn't close my calls. But you take profits in this market when you can get them. And that was a great day. Would I buy Gilead here? I let it ease back some if it does. Whoops. Now you're going to see a bunch of stocks that are COVID stocks here. Moderna, never heard of this company until a vaccine story, and they are one of the in-trial vaccines for COVID, and you could see how extended it's been. There's going to be winners and losers here. It's hard for me to chase a stock that this extended, but it's been a leader here. Regeneron. Now this is different. This is a stock. I remember George Roberts asked me about it about a month ago at 500. I hope he bought it because it's had a big move since then, although it had a little bit of a pullback. This is a real drug company. It's been around for a long time. It's got some great drugs in the market, does a lot of licensing on their drugs, so you may not have heard of them as much. Also a leader on the COVID space. Boy, it's expensive here. It was expensive at 500. It's really expensive here. You can see it's at its high jump. But this is a leader. It's hard to buy these things here. Insight broke out to recent highs, 1-year highs this week. Why? Because its drug for myelofibrosis, a uncommon hematological illness, apparently may have some benefit in, you heard it, COVID. Let me tell me I can hit the page down. Let's see if that works. Yep. Alexion, hard to buy this. It's in a downtrend. Amgen, another stock, Arcus Biosciences. This is up because I think it was Gilead said they're interested in buying them. So this is a potential news story. Amgen, it's in a long-term loose uptrend. Top of its cycle, probably wouldn't be chasing it. A lot of interesting looking biotechs. Some of them, like Novavax, I think are in specialty pharma. So of all of these, it's hard to buy them, isn't it? They're all extended. So you might just want to buy LABU here. I like buying it when it's low and selling it when it's high, and it's low here. And it is a 3x leveraged ETF for biotech. Midstream oil and gas. We're not talking quality. We're talking things that had a big move and have a big dividend. Williams Company, I put this on my buy list. You could see it's moved above its 50. It's already gone up more than a double from its bottom. It pays an 8.5% dividend. Same story for ET, not quite as big of a move, pays a 19.8 if they can afford it. 10K pays 812.1. These are not growth, these are not leaders, except if you consider a dividend to be a leader. Electrical power equipment, let's change the index group. You know, why is GE here? Certainly not a leader, because 2-day force looks at price times, change in price times volume, and look at the average volume on General Electric. Gosh, the one here that I've been in and out of is Generac, and that's not even the top two. We're getting into hurricane season. They're expecting it to be a bad one. I'd be watching Generac for some positive moves. Next one down are banks. These are the little banks. They all have the same exact pattern. Now, they're going to get some fees on the small business loans. Maybe we've seen the bottom of the banks. Maybe as oil seems to stabilize, these banks that might be leveraged to some oil debt may be okay. I don't like their patterns. They're all very low, but maybe you're going to buy low and go high. Don't they all look the same? So again, why play with name risk here unless you know something? KRE is an ETF for regional banks. It looks like everything else, and it pays a 4% dividend. Next one down is application software. I love Salesforce. My daughter has a great job because of this company. She's a Salesforce administrator for a startup technology company. Hopefully someday she can help pay for my retirement. Yeah, dreams. Salesforce.com has retaken its 50-day moving average. Now, is that a traditional bullish appearance where I get all excited? Heck no. You want to buy this. You want to buy a breakout from the 50-day moving average. It may turn out to give you one, but it's had a nice recovery off of its bottoms. Boy, it would have been nice to buy down here. You want to buy when nobody else wants to buy. It's just tough to do it. Autodesk, similar pattern, but broke out. Adobe Systems, again, similar pattern, breaking out. Had some profit taking on Friday. Stars Group had a Bible, what looks like a Bible gap, but must not have made all the criteria. So this group looks super duper strong, doesn't it? Paycom struggling below the 200. I made a lot of money on this one in the past. Missed the last move up. I'd rather it retake its moving averages before I jump in. Workday too far down. So there's some good things in application software. Medical devices. Now, I struggle to understand these because a lot of these are for elective procedures. And elective procedures shut down. But perhaps with COVID easing, there'll be more elective procedures and their use will come back up. Medtronic makes a lot of cardiac pacemakers and valves, moving its way up. Small dividend, 2%. Boston Scientific, similar pattern. Stryker, similar pattern. So the first three are all great companies, all potentially at decent buy points. If you believe that COVID's getting better and we'll see people go back to elective procedures. This is a more unknown to me. It had that, what I call the plug pattern with a massive move and consolidation. Now it's taken off again. I have no problem getting involved in something here. 3 kahunas in the last 10 days. coming out of a squeeze. I just don't like Friday's candle. That's kind of a shooting star appearance to me with a big topping tail. Edwards Life Sciences, again, why is a elective surgery cardiac company doing so well when COVID is still blocking elective procedures? People must think that things are getting better. This one looks even better. It's taken over its 200-day moving average. The weekly bongo has turned green. This has been, as you can see here, a big leader. So I typically every night will go through the top 10, expiration and production. These will be very similar patterns. Junk off the bottom. It's hard to get excited by these, but perhaps oil's going higher. It's always a question of which ones are going to survive. That's EOG. ConocoPhillips is a big boy, pays 4.1% dividend. Maybe you buy it down here. Occidental Petroleum, Apache, all up off the bottom, all levered to the price of oil. I bought some Diamondback so I could participate. It has a 3% dividend yield, again, if it can maintain it. Semiconductor devices led the market up, gave up a little bit on Friday. NVIDIA, super duper move despite this pullback in the middle, out to approaching new highs. It's hard to vote against NVIDIA. Great fundamentals. Great fundamentals. AMD, another leader. It's got earnings out this week or in the next week. Broadcom lagging a little bit here. Texas Instruments, I bought some of this week. Broke above the 50. Mellanox is a takeout. So there's at the top of most of these lists are some nice looking stocks. Nevro Corporation, don't know anything about this company. Specialty pharma, neuromodulation platform for pain, broke above the 50. It's an expensive stock that doesn't make money. Check that. It has revenue. It has no profits. A lot of revenue, growing revenue. Taking out its 50. That's a great pattern on the left. Love to see it get back into that on the right of the chart. Zoetis, I think this is a veterinarian medicine company. Looks nice. Move up off the 50. Axosome, headache drug, positive recent data. Pretty much filled its gap and is going higher. I'd like to see it break above the 50. I've been playing that one. Apellis, this looks great, broke above the 50. So here's a group of stocks that actually have decent chart patterns. Now, I say that it looks great. Why? Because they're at least in the upper right-hand quadrant, not the lower right-hand quadrant. Traditionally, I want to buy stocks in an uptrend that pull back to the 50 and then move up on momentum signals. These are not them, but this is what you're playing right now today. And you got to play what you got, not necessarily what you want. And then lastly, Tesla in the automotive industry. Hard stock to play. Would have been nice to have bought it here in the 200-day moving average, huh? So, quite a few things that look interesting. I found 10 stocks to watch for shorts. If this market rolls, then my short list is usually good. But if the market keeps going, my shorts will go up. They won't go down. So it's more of a signal than anything I'm going to jump into on Monday. Now, I mentioned the edge tool, so I just want to show you this. Now, you have to have Metastock, and I'm going to talk to Cigar again about, are we sure that the data that he needs for this tool is not in HGSI? And you might say, but Jeff, isn't all this in HGSI? And the answer is yes. The difference is it's a true real-time platform. It's running constantly on my desktop, and I don't have to hit the update data, which I have to do in HGSI. So to me, I'll use the word complementary to HGSI. This, for a while, seemed to be interesting, but who cares? But actually, there's a lot of value in it. And what this is doing is it's telling me the best performing stocks. Now, I have to hit this calculator during the day for it to update because it takes a few seconds. But I will find lists of stocks that are leading during the day in these various categories, and I will come in and I will grab them and drop them into my platforms and see if anything looks good that I should be doing intraday. So it's showing me momentum intraday. It's giving me, when it says 0 days, and this will move over to the right, as you can see on Saturday. This was Friday. This is the current market day is a 0. 1 day is yesterday. Since we're now on Sunday, the last market day was Friday. They're the same. But on Monday morning, this will stay, but this one will change and reflect Monday. So I could see which groups are moving up. This is by, ranking, or I could see which groups are winning by sector strength. And you could see on Friday, all the groups were up. Energy was up 8.59 despite oil being weak, and staples were up 1.62. Now that might be useful to me. Now I'm going to show you industries. They rank all the industry groups as well. So I can look at over the last 2 days which industry groups have had the most momentum. That'll give me a list up here. Or I might just go over here and say, show me, look, 145 to 3 positive industry groups on Friday. Give me wow, those oil and energy stocks which were lagging are all the top groups on Friday. Isn't that interesting? All right, so let me say that during the day, I see on the sectors, let's look at 2-day performance here. The financials were leading, or energy was leading, and so energy looks like, is it turning around? So I would hit energy, and I believe, I think I hit gears here, and it shows me the different industry groups in energy. And I noticed that, wow, they're all high. There's 148 groups, and almost all of them are above 140, except for drillers. Well, I don't want to look at drillers, do I? Which one do I want to look at? This one's been oil, gas, storage, and transportation looks interesting. So I'm going to click this here, and then it's going to pull up some of the groups, the stocks that are in the list here, the S&P 1500. So I'm able to drill down intraday and look to see, are there any of the stocks here that look interesting? Now, if I go back, let's pick one of the other ones. That may have more stocks in it. So energy, exploration, and then I look under valuation, and right away I see that the best valued stock here in blue is this QEP, and I might take that out of there. Actually, I want to, it's giving me the symbols for meta stock. I want it to be TradeStation. Let's just go into TradeStation. QEP. Let's look at it. Well, this is a beaten down stock that's 31 cents, so I would pass on it. But that's a way to do top-down during the week inside a Q, and then I'll bring it into TradeStation or HGSI and look at. The valuation on these stocks is not great. And that's, well, we saw that these were junk off the bottom on the exploration and production. All right. Let's look at my buy watch list. See if there's any stocks here that might be interesting to look at. Except this is last week's buy list, Jeffrey. Go into 490. Let me kill this one. And let's go into this week. Here we go. Let's take a look at some of the stocks that I have interest in this week. And then we'll close this down within the hour. Many of these you've looked at before. Gilead, how do I chase this? You know, as I said, I rolled my calls up. I took profits. I'm still in it. I got a little position left, maybe 20 calls. Shopify, man almighty. So Shopify, this is when I want to buy. This is when I want to buy. It's hard to buy it up here. And so I took profits, and hopefully I'll get a pullback and I can get in. It doesn't make money. It's sort of the e-commerce platform for everything but Amazon. They had a tweet on Thursday for the CFO saying that every day feels like Black Friday. They had great earnings here. Big gap up at the wrong time. This is as the market rolled over, and you could see what happened afterwards. So I took profits, but this is one I'm going to watch, not enter. Dexcom earnings are the 28th, so that's got to be concerning. This is one we've looked at before. It's a leader. It's got great fundamentals. I'm continuing to follow it. Any pullback I might want to enter. Lululemon. I have a kahuna breaking above the 50-day moving average. It's not extended. Boy, it would have been nice to buy down here, but you never know what's going to happen there. Coulda, woulda, shoulda. On Lulu, I'm either going to do one of two things. I may open a position, or I may look down here and sell some puts and just get some free money. Wynn Resorts. I guess we can learn from Macau what happens when they open. I don't know when Wynn's going to open again, but it's probably going to have a stock go back up to its old highs before it's busy. It's starting to make its move. Its earnings are in a couple of weeks. It might be interesting to make an early position on Wynn here and then add to it when it goes higher. Lockheed Martin retook its 200-day moving average. Higher highs, higher lows. Salesforce we talked about. Target. Probably at a good buy point. Better buy point back here with a couple of kahunas, but more risky. Autodesk, similar buy point. Fidelity Information Services, lower down in the pattern. Stock looked really good in TradeStation, if I remember correctly. New person buy signals. It'll move up here. Resistance up here. I have to get across this line, but this one looked interesting down here. Fiserv, I've talked about this many times over the years. I pay attention to it because one of my buddies sold this company to them. And every time this stock sells off is a buying opportunity. It's starting to move up again. I think it's a buying opportunity. Blackstone pays a 3.9% dividend. This whole group of asset managers are starting to recover. Williams we looked at. Adobe we looked at. Stars Group probably gone too far, but something to look for on a pullback. Bristol Myers, I've talked about this every week for the last 3 or 4, a leader in immuno-oncology, breaking out. Here's the LABU on biotech I mentioned. ServiceNow had big run here. No one says it's going to do that again. Big run here. Finally breaking up above the 200. A break above the 50 might be interesting. Great earnings per share growth. Applied Materials, not yet, but something I want to watch. Good earnings per share growth. A move up above here would be interesting. Also a place where you might expect a failure. My favorite REITs have been the ones that do the the cloud-based infrastructure, and this is Digital Reality Trust. We talked about this over the last couple of weeks. Another defense play, Northrop Grumman retaking the 200 team, almost to new highs here in a squeeze. Walmart at all-time highs, a little bit late. I did buy some down here. I did okay on Walmart, still have it. Baxter, this was mentioned on Fast Money, and I looked at it and said, well, it's kind of a loosey-goosey chart, but it's back to its highs, has good earnings per share growth, and they make a lot of the things that hospitals are going to need to resupply. Progressive, if I was looking at an insurance play, I like Progressive 3.2% dividend. L3 Harris has had a big move back to its 200s. This is the third defensive company. Maybe they're up in sympathy with Boeing, but something to watch. IQVIA Holdings, one of my competitors on the healthcare data and IT. I played, I was squeamish off the bottom. I had a call spread. I made a little bit of money. I wish I didn't have a spread and just a call, but such is life. I got defensive when I got underwater. Again, making money is good. It just retook its 50. Leidos, IT technology, just broke out above its 50. I think this is interesting here. It was in the midst of a great run-up before the economy closed. BioMarin, biotech that you can buy kind of at a decent price. Pullback, just broke above its 50 here. That's probably, I'll go a couple more. CloudStrike is one I'm in. A antiviral safety security play. Had good earnings and broke out earlier after being down. Teladoc, a leader here, one of the few stocks that have a pattern like this. This company does telemedicine. Earnings are coming. No reason to think it slows down. Look at that demand versus supply. GDS Holdings is another one with a decent chart pattern, maybe one of the best chart patterns of the day. Pullback, well, sitting on the 50 with two kahunas in a row in a squeeze. Let me just look at this in TradeStation out of curiosity. New person buy. I would set a buy stop above this line here, and my first target will be up here about 7-8 points. That looks very interesting. In my traditional views, you could see coming in off of its trend line support. OBV is turned up. Person indicator for volume is turned up. Market catcher, not a big help there. So GDS looked interesting. If I had to buy something, that's probably the best looking chart I've seen. And then if you want a cheap flyer, I'm interested in Sohu. It's a Chinese gaming stock. I read a couple places that some of the Chinese small stocks are outperforming. Well, that's what this is. Two kahunas in a row off the bottom. The weekly bond will turn green. Doesn't make any money, although it does have a lot of revenue. People are staying at home. They're probably playing a lot of games. And again, on TradeStation, buy signal, high close doji on the daily. Look how strong OBV and volume are. Market catcher went positive. You had a major cycle on the weekly low. I hate to say this, you don't have a whole lot to lose here. It's a cheap stock. I'm going to buy some of Sohu and see if I can get a run, at least up to the 11 range, which isn't huge, but it's about 20%. On that note, I think I'm going to say goodbye. Let me just put the rest of my buy list up here. Now, again, for those of you that haven't watched me before, I'm not going to go buy all those. I'll be lucky to buy one or two during the week, maybe three. What I'm going to do is I'm going to stick them into either a market watch list in Thinkorswim, and I'm going to look for a proprietary momentum indicator here where a positive one is a buy signal. I may look for kahunas occurring during the day, high closed dojis or low closed dojis, pocket pivots, viable gap ups, the daily Laguerre, which has been a really good thing of helping to find good buys. I'm going to look at GDS and show you what I'm talking about in a couple of minutes. And then I may look at seasonality. These are Dr. K indicators. So let's look at APPS, and let's look at and GDS, and then say goodbye. APPS, we'll start with that one. So, why am I looking at APPS? I'm looking at APPS because, you know, it's a lousy looking pattern here, like everything else, big sell-off, it's moving up. I like to see it take the 200 because APPS, which has earnings coming, and let me put my glasses on, sorry. Looks like earnings are coming maybe Monday or Tuesday, has huge seasonality here. Huge seasonality. On the market watch, it says to me that, let me get APPS. Next 20 days, average return is 25%. Now that return drops after that, so I would take my profits quickly. So APPS, and the other one I liked was GDS. Let's go look at GDS. All right, so what I really like about GDS is notice how when this Laguerre turns positive, it finds an opportune buy point. When the Laguerre turned positive, it found a good buy point. When the Laguerre turned positive, it found a good buy point. When the Laguerre turned positive, it found a good buy point. It's just finding periods of time when the stock is more at a value level. So my Laguerre just turned positive. I had a person buy signal, retook the 50-day moving average. I like GDS, which I already showed you. On that note, let me just show you one more thing, which is the equivalent to Market Watch in TradeStation, which is called Radar Screen. And one thing I want to do that I didn't do yet, so let me just, I like taking all those stocks that I'm watching. I'm going to copy that and go into my radar screen. I'm going to paste them. And now I'll be able to watch this entire list of stocks during the week, looking for my signals to pop up, whether they're Q, HGSI related, Rouse and Catcher, earnings dates, and John Person. On that note, thanks again. Talk to you in a week. Goodbye.